Car repossessions are up by 40%. What does that mean to mortgages? Hi everybody, I'm Krista Lindstrom from Mortgage Simple, and I'm here for Krista's Mortgage Minute. So today, we're going to talk about something that's been in the news a fair bit recently, and that's car loans. So recently, Bank of Montreal has stopped doing car loans, completely removed it out of their portfolio. You cannot get a car loan at Bank of Montreal. And TD Canada Trust has announced that they have seen a 40% increase in repossessions. And that's really quite an alarming number. Holy smokes. But what does that mean for mortgages? So let's just talk a little bit about why it's happening. The most common car loan that's sold by these lenders is 84 months. 84 months is equivalent to 7 years. That's a really long time. But what we are seeing happening is that cars are a depreciating asset. So they actually owe more than what they're worth, typically around the 4-year mark. So when times are tough, like they are right now financially, and people are struggling with finances and they realize that their car is worth less than what their loan is, they're stopping to make their payments. And that's what's causing the increase of repossessions. But how does that relate to mortgages? So typically speaking, when we start to see default of that magnitude in cars, that's a precursor to what could happen within the mortgage industry. And the federal government has laid a mandate down for all of the Canadian banks that they need to be increasing their financial reserves. And so what that means is they are predicting that there will be mortgage default in the future, and the bank needs to have more reserves on hand to cover those defaults. So as interest rates rise, and we're going through these difficult times, the inverse happens to house prices. So typically, as interest rates go up, house prices go down. And nobody really ever wants to see their house price go down. But in all reality, in Canada, we are in a significant housing crisis. Our children, or my children, I have a 20 and a 21-year-old child and a 23-year-old stepdaughter. They can't buy houses right now. They're too expensive. So we're going to go through some rough waters here as people struggle to make their car payments and their home payments, and people kind of struggle a bit financially. But hopefully it's for a reward at the end that house prices will actually decrease in Canada and our housing crisis goes away.